Well, if a bank couldn't make money in last year's housing boom, they should give up. Westpac made $3.3 billion in the half year, but it really got credit for cutting costs by 27%, which is what the new CEO, Peter King, promised. The big four banks collectively made $14.4 billion in the half year, a rise of 5%. But they've been dealing with a steady decline in their profit margins for 20 years, which is what happens when interest rates are cut to the bone. I mean, you can't make a 2.5% margin when you're only charging 2.5% because you can't get money for nothing. And that's why they'll be using this year's interest rate hikes to expand their margins, that is, increase lending rates more than deposit rates. Westpac shares jumped 3% because of that cost cutting. Other banks went up, although ANZ went ex-dividend. Miners fell and Magellan was dumped after announcing the sale of Mexican food chain Guzman y Gomez for $140 million. Investors obviously like tacos and burritos. The US market fell on Friday after a strong employment report raised concerns about lots of US rate hikes. And the same thing led to a surge in the US dollar, which took the Australian dollar down to 70 US cents. On commodity markets, iron ore dropped 7% because of concerns about China's zero COVID strategy dragging down its economy. And by the way, there have now been 102 central bank rate hike decisions around the world this year so far, which is almost as many as the whole of last year and a lot more than the whole of any previous year for quite a while. So it's all happening. And that's finance. Thanks for watching. You can check out more finance news by clicking there. And don't forget to click subscribe down there to get all the latest updates from ABC News.